All right. Good afternoon, Simpler family. Happy Friday, January the 17th. It is 1 p.m. Eastern Time, 12 Central, and I am going to get started here with our weekly teaching session. Today I'm going to be talking about overtrading and why I avoid it, and why I believe it is a good discipline for you to avoid as well. Good afternoon, Marco. Thanks, Omer and Mirza. Appreciate you guys so much. So, what is overtrading? Overtrading to me, and I am speaking from experience in when I first began trading, I was definitely an over trader. A little backstory. I have been trading the stock market since my 20s, and I'm now in my 50s. But as far as actively trading options and such, I started doing that about 6 years ago. And in the beginning, I definitely found myself in a position that I had way too many trades on at any one time. I just was not educated or disciplined enough to understand the value of not over trading. So after doing that for a couple of years and making good profits and then giving those profits back, and just really a seesaw battle on my P&L, I had to come up with a plan in order to be more selective in where I'm going to deploy my capital. And so for me, that started out with creating some rules around the amount of money I wanted to have at risk at any one time. I can't give you exact amounts for your account. I'm just going to speak in percentages and the hard set rules I have for my account. And since I have been using this for the last 4 years, it has really cut down on the over trading that I found myself doing in the first couple of years. So for me, I always know my account balance in my trading account. And I have a hard set rule that never at any one time do I have more than 50% of that account balance out in the market. So at risk. At any time you have positions on in the market, they are at risk of going to zero. Okay? Because we never know what could happen overnight when we carry positions over. So, my first hard set rule that helps me not to overtrade is that I never have more than 50% of my account balance allocated out into the market at any one time. And honestly, over the last 4 years, I can say I've never had even close to 50% of that balance allocated. But I do have that 50% rule that I stick to, very disciplined in that. Second off is the idea of throwing a bunch of trades at a wall and hoping that something sticks. This can lead to overtrading. If you are just maybe you follow alerts from a lot of different traders and by if those traders are aggressive on any one day and you're following all of their different alerts, you get to the end of the day and you realize, oh, wow, I now have 15, 20, 25 trades on, and almost all of my capital is invested in the market at this time. I'm not saying that it's not good to follow trade alerts because obviously many of us do that. What I am saying though is that if you find yourself following trade alerts from many different traders, you can quickly become over allocated in the market and in a position of over trading what your account balance is. So, avoiding that by knowing your balance and knowing how much you have at risk is very important. Now, what are some things that led me to over trading in the beginning? The first that I have to mention is FOMO, the fear of missing out. I was so wrapped up in wanting to make a lot of money very quickly that I had a fear of missing out. If I didn't take this trade or this hot name or what have you, like right now, Tesla and Nvidia and Amazon, Google, the hot popular names, I would be like, oh yeah, but Tesla can move so much, and what if I what if they have a big, huge day, like today, for instance, up $21? What if they have a big, huge day and I'm not in a position? That's I'm going to be sad because I would lose out on making money in Tesla. So FOMO, fear of missing out, would cause me to overtrade. All right. Another problem that I had early on was I wasn't patient. What do I mean by that? I would tell myself, okay, I want to buy calls in Tesla when price comes down to $400. I'm just throwing out numbers here. So that was my plan. I was going to buy calls in Tesla when Tesla moved 400 or came down to $400. And then I would be staring at a small time frame chart, like a 5-minute chart or a 2-minute chart, and I would be like, well, Tesla keeps going up. And I know I said I was going to get in at $400, but I don't think it's going to come back to there. And so it's pulled back a little bit. I'm going to go ahead and get into Tesla at $420 instead. I was impatient. I wasn't waiting for my plan to come to fruition. Instead, I would put the trade on at 420 only to watch price pull back to my original level of $400 that I had planned to start the trade at. And then I was underwater in the trade. I was frustrated. I was mad at myself because I didn't stick to my plan. And then and then I would be like, "Okay, well, even though I took the trade early, it's come back now to my level, so I'm going to take the trade or add to the trade again." And then I would be in more over-allocation, right? I was putting more money at risk, and I was then over-trading again because of my impatience of not being able to hold still and get in at my trigger. All right. So impatience would cause me to overtrade. And then another one, and this is a big one. It was carrying over past regret from previous trades. What do I mean? This can be both positive or negative in that if I had been in a trade and I had a plan, and my plan was to exit the trade at a certain level, we'll use Tesla again, exit the trade at $450. And on this one particular trade, I got out early and I watched the P&L and realized, "Oh, wow, if I had stayed in like I planned to do, I would I could have made an extra $300 per contract." And then the next time I went to trade Tesla, right, I would have that regret of not holding on all the way up to 450. I would hold on to that regret, but in this next trade, my target was 435 and price got to my target, and I would think back to that past trade and be like, "Okay, yeah, it's at my target, but remember the last time it went all the way up to 450 and I lost out on $300. So rather than getting out here where I know I need to, I'm going to hold on." And then boom, price would turn down. I would give up the profits that I should have taken, and I would repeat the cycle over and over again. Can anybody relate to any of those scenarios that I talked about? Has anybody else suffered from overtrading because of FOMO, or because you were impatient, or because you were carrying regrets from past trades over into your new trades? Just me? Just Marco? Surely there's others that have ran into these situations. What I have implemented is this, and I believe that 90% or even higher of if you're going to be successful at trading or not successful at trading is based on psychology, your trading psychology. All right. Um, of course, the great Mark Douglas teaches or taught on this a lot, and I regularly listen to his old teachings as well as audiobooks. And he teaches a lot about trading psychology. I believe if we can get that one thing right, our probability of being successful traders increases exponentially. So, for me, what does that look like? How do I keep a good mental state? Sorry. Sorry about that, guys. My dogs went crazy. So, how do I keep that good mental state while trading that helps me to not overtrade? And it comes down to this one thing. I take time when the markets are closed to come up with trading plans on whether that is for day trades or swing trades. Every trade that I put on, I must have a plan for that trade ahead of time. So for my swing trades, every Friday in the trendy room, I spend an hour looking at potential swing trade setups for the following week. I pick 6 to 8 names that I want to potentially swing trade. And then I create a trade plan based on supply and demand, which is a strategy that I trade based on supply and demand. And I have that plan for the following week long before that week of trading starts. I have those 6 to 8 names. I have alerts set on my charts at the level that I want to enter, at if I'm scaling into a trade, at the level that I want to add to. I have an alert set for my stop. I have an alert set for my targets, and then I wait. That's the key. I wait. I wait for those alerts to go off before entering a trade. If I miss out on a big run because it did not come down into my level, then I go back, I look at the chart, and I say, okay, did I calculate my entry wrong? If I did, that's a learning moment for me, right? If I didn't, then I chalk it up to, oh, well, price just didn't come down far enough, or price didn't go up to supply, quite up to supply. And then I just wait for the following week if that is something that I want to trade. Another thing that I do, and this is important if you find yourself like not trusting your plan, is I put in an order to automatically fill at my level. I set it as good to cancel, and it's just sitting there. I don't have to worry about what my emotions are when price comes back to that level because the trade is waiting to execute at these given levels. So, for an example, I'm going to use Okta as an example here because it is a trade for next week that I intend to execute on. You can see here I have some limit orders setting in here, waiting to be filled. And if price comes down to the demand zone, these trades will automatically execute. Now, does anybody need help with how I set these orders up in advance? Anyone need help knowing how to do that? Because I can show you real quick. So for Okta, I am targeting 89.86 by 92.52. But I want to wait for price to pull back in this demand zone before getting in the trade. I also intend to scale in this trade. So I am choosing to trade the December 21st, 8250 calls. All right. So my first entry is $84.20. So what I do is I go down here to the options that I intend to buy, and I adjust this option price, and I pay attention to the expected octa price right here. So I adjust this price down until it is at, was it 84.20, I believe? 84.20 at or around right there. This is the expected price of the option that I want to get into when octa is at my first trigger. I hit confirm and send, or sorry, change it to good to cancel. I hit confirm and send like that. And then the bid is sitting there waiting for price to pull back. I don't have to worry about being in front of the charts or anything like that. Rather, price is just sitting there. And if octa pulls back here and that option price comes down to my trigger, which is $4.25, I'm going to be long octa right there. Same thing for my ad. And then once I'm in the trade and the options have been purchased, when price reaches my target, I will put a sell in up here. And that way, I don't have to be sitting in front of the charts. I don't have to worry about that, when price pulls back to a level that you're wanting to go long, a lot of times there's a lot of fear in the market at that time. You might be listening to people that are of the opinion that price is going to continue to fall, etc. That can mess with your mental state or your trading psychology. So having these orders in place before price gets there allows me to not have to deal with that aspect of trading. If it's a good setup, then I get in the trade. If it looks good to me today, then it should look good to me when price is pulling back here, right? Claudia asks, how do you move the price? So it's just right here with the, let me show you again on the screen. Right here under price, Claudia, can you see it on the screen? Under price, if you're looking for a pullback, you want to use the negative sign right here and adjust the option premium price. You see? And that's how you get the expected price to move like that. All right? You're welcome. Absolutely. All right. So that helps me to not overtrade as well because I already have my plan for the week and I have the charts, I have my bids in, and the ones that execute, great. And the ones that do not execute, I just move on. They might make my list the following week or they might not, but it keeps me disciplined to trade my plan and only those trades that I have planned out ahead of time. The same would be true for day trading. For instance, let's look at a day trade chart that I would be interested in trading. Let's look at Amazon. All right. Every evening after the market closes, I go in using a 2 hour or a 1 hour chart and I create trade plans on certain names that I am interested in potentially day trading using a trendy indicator called the PMZ or the pre-market zone. That's what I use to day trade. But the evening before or early the morning in the morning before the market opens, I create these charts so that I already know my levels that I want to get in. I already know my targets that I want to execute or take my profits at. And then there's nothing left to emotions or fear of missing out or, um, regret from other trades previous or impatience. None of that is a factor because I have the trade plan in place and I already know where I'm going to get in and where I'm going to get out. So this is what an Amazon trade, my targets would look like to the downside and to the upside. The red box being the target to the upside, the green box being the target to the downside. Then I go to a 5-minute chart. I look at that PMZ, which is this cyan box here on the screen. All right. And I need to look for trim levels. In this case, you could use the topping wick before price or before the market opened, or use the topping wick on that first 5-minute candle. I'm going to use the topping wick on that first 5-minute candle. Then my plan is to go long when price pulls back to the PMZ. So that level is, let's see here, 225.34. So I'm just going to go over to Amazon, choosing next Friday, the 225s, 225.34. I adjust this price, and it's not always going to be exact here, but it's close enough. And this is just an example, so I'm only going to buy one. I put the order in. And if price pulls back to the PMZ here, I know that I'm going long on Amazon, one contract. Okay. Then I don't need to sit here and stare at the chart. I don't need to look and say, oh my gosh, but what if it doesn't pull all the way back here? Fear of missing out, then I won't get the trade up to here or up to my target. Oh my gosh, all of that, right? Those are no longer factors because I have my plan of going long at the top of the PMZ. It in this case, we have demand right below, so I would not cut the trade here at the bottom of the PMZ because I have all of this support below. But normally, my stop would be here, so I would put an alert there. And if that alerts and a candle closes below my stop, then I would stop out of the trade. If this order fills, I go ahead and put a sell at my first target. If I have multiple contracts, I'd put a sell at my first target and my second target. And that is how I keep from over trading, as well as I trade the setups that I find ahead of time. All right. All right, guys. That is my little spiel on over trading and why I believe we should avoid being over traders. Um, it can really, really wreck your account if you allow yourself to get into a not so good mental state regarding your trading and just over allocate more money than what you can comfortably afford to lose to the market. All right. As always, thanks so much for joining me. I look forward to talking to you again on Monday here in the essentials room. And if you're in the trendy room with me, I look forward to getting together in about an hour and a half and going over our swing trades that we're going to look at for next week. Y'all have a fabulous weekend, and I'll talk to you again soon. Much love, fam.